Welcome, Hendrik. Good stuff, guys. So last panel and speech of today, and then we're going to move to aperitif later. Not quite yet. From left to right, we have Jib from Rysk, also co-founder of Rysk, like that. Hendrik, which we heard a little bit about him before. We're now going to deepen even more with this panel, co-founder of Thalex. Piervanni Ugolini Mugelli, partner at Campsor Capital. And then our moderator, which is Federico Tenga, R&D at Bitfinex. Guys, have fun, and I'll leave it to you.
Thank you. All right, thanks. Okay, so let's keep in mind that it's 6 p.m., so people may be a bit tired, so we need to keep this a little bit fun and entertaining. But maybe before we start, if you guys want to say a couple of more words about yourself and your background, especially in the context of options and derivative and volatility trading.
Yeah, sure. So Piervanni, I'm a partner of Campsor. We are a crypto hedge fund. We are specialized in trading options. As far as I know, they say that we are among the top 3 funds for volume in altcoin options. I'm a crypto native, working in the space since 2011. Started on the mining side, and then shifted from mining to trading in 2016.
Yeah, I'm Hendrik. You guys know already about Thalex from my previous talk. My background actually before it was working for this very entrepreneurial family office where we were sort of early investors in all of crypto in 2016, and basically learned about like options trading and volatility trading over there.
Hey guys, I'm Jib from Rysk. I'm co-founder with co-founder with Dan. We're the best place to write on-chain covered calls. Yeah, I've been in crypto since about 2020, mostly as an engineer. I run the technical and product side of Rysk. So yeah.
Yeah, so I think we have an amazing panel because we have someone working on the options on DeFi, someone working on a centralized exchange for option, and someone working on the liquidity side, market making. So I think we cover all the aspect of this industry. And speaking of the industry, I mean, I think that the first question is, I mean, in TradFi, options are huge, are much larger than the future market for equities and commodities. While in crypto, it's a little bit of the opposite. I mean, futures, I mean, especially perpetuals, are much larger in terms of volume and open interest than the option market. So, I mean, what is your take on this? Is it just because the industry still needs to mature, so it's just a matter of time, or is it a matter of this? We have different market participants with structurally different preferences. And yeah, how do you see this situation can change? So, yeah, maybe.
Yeah, so I think that demand is definitely there for options and is growing. As you said, it's still small relatively to spot and Delta One products. For sure, market makers needs good liquidity on perp and spot to hedge. So it's still not there. There are a lot of liquidity gaps. So market makers are quite afraid to quote tight option, but it's not only that, it's really that in TradFi options are used to play both sophisticated strategies as well as to gain leverage. Here we still have the perp product which allow you to have 100x leverage. So the perp in crypto is really competing alongside options as a product to express speculative view. Options still are superior in many ways, but as a fund we see liquidity increasing every day at a greater speed that Delta One products like spot, perp. But yeah, the demand is definitely there, but a lot of room to grow. So for this reason we are investing a lot into options, and it's also my passion, so it's easy for me.
On my side, I actually think that the options market in crypto will never be as significant, relatively speaking, as in TradFi. And that's mainly because in TradFi you have a couple of these flows that are very dominant, like pension funds, hedging, structured products. And I think in crypto there's just a lot more alternatives with perps to get the speculative views out. What I've learned is that actually a lot of traders, they like to think in binary terms, and some of the retail demand in options that you see in TradFi, it's kind of people playing them a little bit like binary events, right? Like either I make a lot of money or it expires worthless. People trade perps in crypto that way. And I think like when you offer like a simplified user interface, like for instance Rysk does, you also allow people to sort of think about it like, okay, either I buy, for instance with a short put, I buy it lower, or I earn the premium. And sort of this market that is really going after the complexity of people trading options in their full probabilistic sense and thinking about scenarios, that's sort of like a niche, I think, where people are fully interested in exploring the power of options. So I think a lot of it will come more of an indirect way. So for instance, binary options are now like something that a lot of people are looking into. Well, you can use vanilla options to hedge those. People like Rysk drive flows via market makers into options. But overall, I think it's a little bit more of a niche use case than in TradFi.
Yeah, I think, obviously, I think the options market's going to grow massively within crypto, and I think that there are, it's actually a big education issue. A lot of people don't know that they can use options in certain ways, which is something we focus on quite a lot. But actually, I think it's kind of the opposite thing, where perps aren't as big in TradFi. I actually think it might be the opposite thing, where it's just the fact that perps haven't been made available in TradFi very well, be that because, they... Mainly, I think it's just because around 24/7 trading is not a thing in traditional markets, and I think that like has an impact on the effectiveness of perps as an instrument. I think options are significantly better suited for non-24/7 markets, so I think that's why they've kind of become the de facto thing that people hedge with. So I think it might be a thing that maybe perps aren't as big in TradFi, more than options are the thing people focus on. So yeah.
Yeah, and maybe just to add some color, I had a friend working at a large TradFi market maker that they just launched in crypto, and they were already trading 23 hours per day in TradFi, in traditional markets, and the shift from 23 hours to 24 hours per day, they doubled their operational cost to just add an additional hour to follow crypto 24/7. So it seems easy to adapt, but essentially it's quite difficult also for liquidity providers.
And I think also one of the aspects is the interest from the retail side, that crypto is very much retail driven, at least for now. And maybe something that can help retail traders or in general like traders that are not super sophisticated to deal with the complexity of option can be AI to some degree. I mean, it's a buzzword that in this period we always need to put out there. But I mean, do you think it can have a role somehow to help people to deal with the complexity of options? Or I mean, is AI bullish for option, or is it different?
Yes, as mentioned by Jib before, the largest gap here is educational for options. So AI can really help to close that gap, and also the job that both Hendrik and Jib are doing to simplify how to access option. Just last week we had a good conversation with an investor into our company that just invested. It's a large family office from Hong Kong, and he personally didn't had any knowledge about option. He had about a lot of other stuff, super skilled individuals, And he wanted to invest into our fund, but there was this knowledge gap. So in one night, he spent all night speaking with Claude. And the following day, he asked me a lot of questions like how you manage a shadow gamma, how you manage your Greeks, etc. And he learned, logically not everything, but all the basic stuff to do a due diligence on a crypto option fund. So AI can really help to close the gap. For sure, it's not perfect, we all know it, but on the educational side is where you can add more value.
Yeah, I agree. I think it's mostly around a knowledge gap. I think that's mostly, applied to retail, whether it's something that stems up to sophisticated, maybe it does, as Piervanni said. I think it can. Whether people use it for trading, I don't know if that's wise or not. Probably not. But I think that definitely, is the education that kind of matters. It's now anyone can code, so it's sort of like, why can't anyone learn how to trade options with AI? And we don't really know right now, but I'm sure it will happen. So,
yeah, for sure, the idea of outsourcing decisions to an AI model is still a terrible one. But the idea of insourcing, sort of getting leverage on your thinking, that's very relevant. You see that, for instance, the strategies that I explained about selling volatility systematically, right? It's when you want to backtest all these things that used to take a lot more skill and time than now. Now you can basically one or two shot these kinds of backtests with Claude or Codex. And then I would say, yeah, the education helps, right? It's like knowing the product specs, knowing Greeks. Those are not things that drive your edge, but not knowing these things can really lose you money. So having these things in helping you with risk management, helping you just to get to understanding a trading system much quicker, there it will help. I think that the more interesting reflection though will be whether the AI boom and who knows bust will have a similar effect as COVID. Because one of the biggest booms for this industry and the adoption of options also in TradFi was that in 2020 you had basically COVID, people sitting at home, and all the demand from sports betting actually went into options and into crypto. And so now what we could have is actually this kind of K-shaped economy where if the AI bubble doesn't burst, it's going to create a lot of layoffs for a lot of technical people, developers, who might actually then turn to trading as some form of supplementary income. And so I think it could be interesting as well, where it democratizes access to trading. You could have some kind of retail quant explosion in the sense that it's possible to do as a one-man guy what you used to have a fund structure and a team for. And then maybe it's also a force function where people are kind of almost forced to find these new ways of making money in the face of layoffs.
And yeah, so maybe specifically regarding Rysk, you have a product where you allow users to basically sell volatility. Now, over the years, volatility in crypto is kind of trending down. So do you think it's still, is it still interesting to sell volatility, or is it becoming less interesting as there is less volatility in crypto?
Well, volatility going down just means the price is moving less. So I think it kind of it just affects the yields in terms of how close you move your strike down to the current spot price. So it's kind of a mixture of factors in that you can always access those higher yields. You're just increasing how close you get to the strike. But in the end, there is always volatility on these assets. That will always be interesting for people to sell. People still sell volatility on big stocks, big commodities. It's not something they don't do, and it's just because if volatility exists, you can still ride on these assets. And to be fair, if you look at how the market is currently, there's still substantial volatility. If you look at hype, for example, over the past week, it's gone up by something like 30%. And volatility. People say volatility is going down, but something interesting about volatility is just it can just go up in an instant. I remember during the FTX collapse, I was we had an options book, and I remember vol being at 100, which I thought was crazy high. And then I step out for like 10 minutes, I come back and vol's at 140, and I'm and I'm so like, oh damn, shit, this is not great. So the thing about vol is it can always just spike up and down. And something we've noticed on Rysk is as users have become more familiar with the product, they actually wait for those moments. They kind of like, if the market's chilled a bit, they kind of wait for there to be this big event that happens, and they sell volatility into that so they can get the higher yields, which is something that, you know, that's like a second order thing you're noticing by educating users on, in the first place, what is an option. And now they know, for them, it's like, okay, for me, I can earn more yield on Rysk when there's a big event happening. So that's kind of like a second order effect that we've noticed with our users is, yeah, volatility changes a lot. So let's earn more yield when that happens. So, yeah.
You should make a product where user can sell volatility or volatility.
Oh, I don't know about that. Maybe Piervanni can price it, then I think
maybe. But yeah, it's only in relative value terms. So volatility sometimes is going down, but as Chip said, also the price is moving less. So it can also be interesting to sell volatility, even if it's half of what it is right now based on market condition. So yeah, everything is in relative value.
Yeah, exactly. And so actually, when you're trading volatility, right, you're trading the difference between the move that's priced in and the moves that actually happen. And so, as it turns out, like selling volatility when it's high, like for instance, if now you would sell hyperliquid when the price just popped and the implied vol is, was now like 80%, 90% already. So it actually turns out very often that then, because there is something real happening there, there's a lot of true volatility, that actually the spread between the implied and the realized is often unattractive. So you don't necessarily want to sell vol when it's high. You want to sell vol, for instance, when it's trending down, and you can actually earn a spread between the price of the vol and the future expected realized vol. And actually, that often continues to be attractive when vol is trending down, when absolute levels of vol are lower. So for instance, right now it's an interesting time because like you can sell options at like 40% vol on ETH where realized is 30, right? And so the gap is what matters. And then as the asset moves less, your left tail risk is you could argue gets a little bit lower over time, although it can definitely still spike if we see. But overall, it actually makes the option selling a little bit easier, I'd say.
Yeah, and it's interesting to see that finally the implied vol is moving away from a realized vol, because these are all signal of a developed market, because there are also other forces like people looking for protection, buying protected puts, trying to express a view on the market. So those are all a good sign of a market evolving.
And yeah, speaking of market evolving, so now the main assets in crypto where there is a good option market is mostly Bitcoin, ETH, and few of the other like larger tokens. So yeah, on one side there are many altcoins that do not have a good derivatives market outside of the perp, but also maybe altcoins are losing steam. There is like less interest from the market on altcoin. And the other side, we see more interest for tokenized equities or tokenized commodities like XAUT. So in which direction you think that the market is going to evolve? Like to offer like more derivatives for altcoins that currently are not covered, or altcoins are the past and now crypto traders want to be closer to TradFi with tokenized equities and tokenized commodities?
Yeah, it's interesting because the market really goes with trends. So right now everyone is looking at hype. Maybe in 6 months they will look at something else. So for a market maker, a fund, and also an exchange, it requires some time to come to whitelist and start trading a new asset. And this trending in crypto really don't make things easy for all the players. So a system like the RFQ of Rysk, which is scalable, really helping generating those new trades really, really easy. I don't know, maybe they can whitelist a new token in hours or days. So this is great, but you also need a good exchange, a traditional exchange with an order book to also have the full market to allow players to hedge, etc. So those are complementary tools that really work together. The market is going really into this trending of all the attention into a new token and then changing. We're seeing real world assets like gold. I'm not a gold bug, but I don't want to talk about gold. It's a great asset and a lot of attention there. And we are getting some trades done on tokenized gold, both the Tether and before it was also the Paxos one. So the attention is shifting every day, really.
Yeah, I mean, the thing that we've kind of learned throughout humanity is people love trading things and making money. So I think for us, we've built our system to be very flexible. Even if hype starts to decline in interest, there'll be something else that people want to trade, be that stocks, be that another crypto asset, be that another commodity. In the end, we build our systems to be able to be like, right, let's just go to where the volatility is, and people will be interested and start trading and selling volatility on that. So for us, I think, I think stocks especially are very interesting as it's, growing its presence on chain, and we want to be able to replace all of the traditional nonsense of counterparty risk and kind of like trusting these outdated systems, and we want to improve the transparency of all that. So that's why for us stocks are a big push and commodities are a big push, because we think it's important that those things start coming on chain. But then and in terms of like, does it go to a new crypto asset or altcoins? If you want to trade vol, we can do it. So it's just a case of what our users ask for most of the time. So yeah.
But I do think tokenization will seal the fate of a lot of altcoins, that they will just inevitably die. And because at the end of the day, tokenization is about just getting access to assets that were not tradable before. And I think that's the big difference this cycle with the history. In the history, there was a lot of rotation because crypto capital stayed within crypto. It just rotated between alts and Bitcoin or ETH. And now, like, literally an altcoin has to start competing with trading oil on the weekend on Hyperliquid, or maybe soon it will compete with like AI stocks and SpaceX. And so what's now happening is then that as there's access to TradFi assets and those things are then maybe not directly equity stakes, but much closer to like an equity ownership of a company where you start thinking about cash flows. That looks a lot more appealing maybe than a lot of like altcoins that were purely based on sort of dream and hope and optionality. And so what you're now seeing is like this massive consolidation of focusing on only a few altcoins like Hyperliquid, where because the thing is not equity, right? Like it's still like very unclear if you were to draw a balance sheet, like what it would even look like for these altcoins. So all of the focus is now shifting towards the protocols that can actually generate the revenue to buy back the token. And so there's going to be like this incredible bifurcation there, I think, between just a few altcoins that can do that. And then a lot of altcoins where the same amount of like hopium that they used to have is just, that attention is just gone elsewhere. There's too many other alternatives to trade. And it's going to be just a lot, the left tail of the altcoin space is just going to completely shrink.
Maybe so, yeah, this is maybe regarding the underlying side, but do you think also that we can see some interesting evolution regarding on the product side? So, for example, we see that prediction markets are becoming quite popular, and prediction market on the price of Bitcoin is kind of like a exotic barrier option, or like a binary option. So you can see it as a kind of innovation on the product side, like it's a different kind of derivatives that people are trading there. Do you expect that we can see other stuff like that, like different kind of option other than vanilla option that can become popular, or like structured products that can become popular, especially with retail traders?
Yeah, I think as Dan pointed out a lot, in the end, it always comes down to how you package. It's about selling the benefit of what you're trading. We could sell straddles, knockouts, knock-ins, or, the main thing is, are we able to sell that and explain that to a user properly so that it's actually interesting to them? So there's 100% a market for all of this stuff, because these are interesting and useful payouts to people who want to express an opinion. Prediction markets are, a great packaging of all of that. It's like, oh, it's not an option, it's a prediction. So let's change how we even think about this trade. So it becomes more of like this is a sports betting thing as opposed to like an options trade with a big chain, options chain. And so, even we did it with quite a basic one, covered calls and cash to go puts, but 100% we could explore more exotic things. It's just about, we need to figure out the right UX to be able to sell that product and to our users, and as Dan said, get the liquidity to support those assets as well.
Yeah, binary options are really easier for retail to understand. They understand the max payoff, which is $1, and how much they can lose, which is the premium. So the barrier of entry is lower. They can really understand everything faster. We are seeing that a lot of market makers are hiring people. We were discussing before from sport betting companies, etc. Because until you have binaries on Bitcoin on the price, you can hedge with traditional methods, but then you are going into weather, etc. It's just expected value. So you need a different set of skills. It's a pure bet when you're trading the expected value. So you need a whole different set of skill set. So inside those large market makers, they are building pods for prediction market to serve poly market, etc.
Yeah, I think maybe last topic I want to touch on is DeFi versus centralized exchanges. Here we have someone that decided to build on DeFi and someone that decided to bet on a centralized KYC exchange. Why do you think what you build is what they decided to bet on is the right bet, and how do you expect the DeFi ecosystem to evolve as opposed to the centralized exchange one?
It's not necessarily that what I believe to bet in was the right bet. I just think there was a very clear user gap. The centralized exchanges are very well served by Thalex and Deribit. So it's sort of like, but we identified a very clear and distinguishable user that was not being served. So we went all in on focusing on that and focusing on what exactly those users want. I've been in DeFi for a long time. I enjoy the access and the freedom that you have on those funds. I enjoy that I can see what everyone's doing. I enjoy that nothing can stop me from trading these assets, and I can analyze everything that's going on chain and understand and kind of assess these products. I think that counterparty risk is a real issue and very much undiscussed. I think more people like to talk about smart contract risk a lot, but far more money has been lost to credit risk than smart contract risk in crypto and, of course, in traditional finance. And I think that's why we believe that it's significantly more important to be doing DeFi, because you can assess, you can analyze, assess what everything is doing. If you want to understand how risk works, you can read the contracts, and it's doing exactly that. There's no change. There is no kind of separate gotchas that someone can come and say about risk, because it's all written in code there. And so I believe that programmability is very important. You don't need to bring a legal team. You don't need someone's sign off in order to do something. And so for us, the reason I like DeFi so much is, first of all, that there is no ambiguity about what we're doing. There's no things we're hiding. And so on top of that, the other thing also is just access. Traders can just use us, and it's fine. We don't have to talk about it's on chain. It's all there, and so that's why I just prefer that way of doing things. Also, I don't like regulators that much or speaking to them, so that's just a personal thing. So I don't know. Maybe that will come and get me in the future. I don't know. So we'll see.
I mean, for Thalex, the choice was mainly from the ground up for technical reasons, like the way you margin check option portfolios and make it low latency. Like when we started Thalex, there was just no blockchain that could ever support that. Even today, it's still very difficult for us to transpose our performance to a DeFi substrate. We're looking into it, but the way I think it will move forward more is that when you have protocols like Rysk that are DeFi, then you can create sort of a nice, clean, focused product, and then you can have intermediations with market makers that then maybe hedge risk and get prices from centralized exchange. Because let's face it, the pricing discovery still happens, on Deribit, on Binance, etc. But you can have intermediation so that people can sort of choose between a centralized and decentralized experience. What we're looking into personally in partnerships with DeFi is would love to help out Rysk on helping also with providing liquidity on their vaults, but also my conviction is that some of the complexity of options trading, where you have to choose the expirations, choose the strikes, it's like 10 times more complex to get that done on DeFi, and then the demand might shrink because people find it as a UI not attractive. So one of the things we're building right now is like a perpetual move contract where you can basically have a straddle exposure, but it's sort of wrapped into a perpetual, a little bit similar to how currently oil futures are traded on Trade XYZ, where actually the funding rate becomes like something that tracks the cost of rolling a future basket. And then what you can do is you can wrap that into sort of a perpetual style interface for the users with some kind of volatility exposure embedded, whilst then the hedging flows and the complicated stuff gets executed ultimately on centralized exchange. So I think, at the end of the day, DeFi, especially with the regulation, the only thing that could kill DeFi is regulation. And I think now that the last few years we've made so much progress. So I think DeFi is getting large enough where it cannot be undone anymore with whoever comes after Trump, basically. So I think the future is then that you have essentially like a coexistence, but where DeFi keeps on gaining market share for sure.
Yeah, DeFi, CeFi, different product, but for different needs. So they will all stay for the long run. There's the market needs both. I'm a huge fan of DeFi. But CeFi is needed at this stage where you still need ramp on, ramp off, but also nobody is able to do his own due diligence. As we, in example, if we trade on Rysk, we read the smart contract, we do our own audit of the protocol. Not everybody is able to do it. But a lot of people are able to do a due diligence on our centralized exchanges, review the financials, so both will stay for the long run.
Okay, last quick question for somebody that wants to start learning more about options, get educated, and eventually starting to trade them. So what do you suggest as an entry point on the educational level? Do you have a book you suggest, a YouTube video, or just maybe chatting with an AI bot?
Yeah, I think Claude's a good place to start, but I think the actual thing needs to come from the intention. It's more like, what is your objective that you want to achieve from your financial goals? What do you actually want to do? And then I'm sure options in a way can serve that for you. So it's just about figuring out what you want to do, and then from there, kind of educating yourself on how to achieve that specific outcome with options. So, for example, if you want to be an income guy, you go and ask Claude, hey, how do I do income? It'll tell you that you want to be writing covered calls and cash secured puts. Then they might say, go and check out the Rysk UI. It's really good at showing you that. So that's something you could do. And then, yeah, if you want to be a leverage guy, then, go to Robinhood or something like that. So it's up to you. But yeah, I think it comes down to like, what is your intention with the trading? I think it's hard to just say, teach me options, because They are extremely complicated, and you'll get, thrown off by all the options and choice you have. And so I'd say, yeah, just know what you want to do first, ask how to do that, and then start.
I think indeed just starting to trade is the most important thing. And the key thing is also, it's a bit like options is a bit like a programming language in the sense that, yeah, you can literally construct any payoff with it, but you don't have to, right? You can focus on something simple. Like to sell covered calls, you really don't need to know that much about the option, right? The main thing you need to know is that you're still in a volatility trade, because if, like you're selling hype calls right now and it goes to 100, you're not happy. If hype goes to, I don't know, they get hacked and it goes to $10, you're also not happy. So your happiness spot is somewhere in the middle where it gently goes up and you add some yield. So you sort of need to know how they work as tools, but if you focus on specific options trades, you really need to know just enough to do that trade. So I think it's about like, yeah, it's about like just doing that, just starting and focusing. And then once you get the feedback of the P&L and you get into the trading, then that will sort of give you the educational path and the next questions you have. I mean, the best way to learn about trading is like, why did I lose money, right? And then you sort of learn just enough theory to understand it, and over time you just compound knowledge that way.
Yeah, exactly. You need to lose money to learn the good lessons. Is the only way. As mentioned, the majority of the material is available online for free, so you don't need to go to a special university to learn it. A good book is from Nicholas Taleb, Dynamic Hedging, but it's quite intermediate already.
I think intermediate's a push. I'd say it's,
yeah.
It's pretty advanced.
Yeah. But it's a good book. Yeah.
Okay, great. And maybe we have time for a couple of questions from the audience, if there is any. Okay, then I guess we're good. Oh, no, yeah. Oh, yeah, sorry.
Sorry? Nicholas Taleb is the author, and the title is Dynamic Hedging. Really good.
Oh, yeah. Question?
So you had a take about altcoins having to compete with TradFi basically, and aren't you afraid that by kind of cycling back to that kind of assets, repackaging them as crypto, we will only suffer poorer execution, less liquidity than in TradFi, and right now TradFi is moving towards 24/7 trading, etc. Are we heading to the right direction? Aren't we losing ourselves?
No, I mean, we're absolutely going in the right direction. I think all of TradFi wants to actually settle things on crypto rails. Like it's a super useful application to not have T+2 settlement and not to have like, try to just like close one brokerage account and move your stocks to another. It just doesn't work, right? Like it's, and so actually all of TradFi wants to go to this idea of portable value, right? That's wrapped in a token. And then the idea that you can actually settle ultimately on a blockchain, probably intermediate via the stablecoins, but you can settle on a blockchain rather than on the old clearing systems. And the only thing really that was holding it back was just regulatory clarity about like what's a qualified custodian, etc. But no, I think that's like one of the certainties is that just in the next few years, like all of finance is starting to look like crypto. Like it's actually one of the biggest achievements. Probably, once you have stable coins, now this is the next big thing in the coming years that's going to happen.
I also think that DeFi serves a different user base who wants more transparency and on-chain, on-chain understanding of what's going on. And I think that in itself separates it from traditional finance. So while we might have more stocks on-chain, as they come on chain, you still have that DeFi benefit. You still have the ability to, analyze what's going on chain and know the flows and everything, and how things operate and write different products which you wouldn't be able to access in the traditional markets. So, I think that's also something to mention, is that DeFi in itself is its own product that has a specific offering that TradFi simply cannot offer. And so I think that's why it's not necessarily going to see, you're not necessarily backtracking by going back to offering stocks. I don't know if I necessarily agree that TradFi wants to execute on blockchain. I don't know if that's true, but I don't know.
On private blockchain.
Huh?
On private blockchain.
Yeah, but a private blockchain is like,
The key thing is the KYC issue, and that's,
Yeah.
that's the big question mark for this thesis. It's like, what basically is going to happen to Hyperliquid? Like, are they going to have to be KYC'd or not? But that's, yeah.
Hyperliquid.
Any other question? Okay, then let's give an applause to our
guys.
panelists.